All right, welcome back for the episode of Carnivore Trades. Today is Thursday, February 22nd, 2024. Doing a special video here today on uranium. Did a post on this last night. We had a good response there. And there was a member in the live stream the other day that brought up the idea of rotating, out of some of, maybe some of the majors here into some juniors. It got kind of spurred an idea from me. So if you like the content, give the video a thumbs up. Don't forget to subscribe to the channel and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. So anyways, let's get into it today. So part of the video here, I got a lot of questions about uranium. Originally, I did not cover uranium on a daily basis in the daily videos, but I got a lot of requests on it, and so I did move that in, at least CCJ and URNM. Part of the daily recap. Right now, I'm just going to give a little technical update on kind of the miners here, and maybe the idea of rotating out of stocks like CCJ and kind of rotating that capital into some things that are undervalued. And I have seen the sector kind of broaden out. And if we take a look at CCJ here, for instance, which we'll get into in a second, but you can see this power bar from the week of the 8th of January. We're below that right now. We do have one more day in the week to repair that. A close below that would be a negative, but if you take a look at just the URNM, you can see we're well above that green bar low. So that tells me the rally's broadening out. For a long time, it was just CCJ, right? CCJ this, CCJ that, and some of the other stocks weren't participating in the rally, but now the rally is broadening out, which is good. It's a good sign of healthy rotation when the majors start to stall out. Does money chase risk in the same asset class, or does it go to some other sector? And we're seeing money chase risk into some of these other stocks and other areas of the market. So anyways, without further ado, I'll start off really quickly with CCJ, and then we'll get to the rest of them. Actually, check that. Let me just start off. We'll do spot uranium first, and there's not really much to say. I'm looking at a monthly here. This is uranium futures too. And you're going to see, we're basically parabolic. We're working on our first down month since almost a year, so April 23. And March 23, that was barely a down month at all. Beautiful base there, and then it's gone parabolic. So we are working on that red month. And what better time to do a video like this where we might be starting to see some corrections and rotation and kind of money flow and money moving around, if that's the case. So, price of uranium has gone parabolic. Obviously, the long-term fundamentals are still in place, but nothing goes up in a straight line forever. And going parabolic for too long is not good. It's not healthy. So we'll see how this comes. We'll see how this shakes out here. Again, you got a pivot here at 73, which we blew through. And if it round trips, you got $60. So that was your breakout there. So that's what I'd be looking at on spot. But right now, CCJ here. Again, like I said, you got to stay above this green bar here by tomorrow's close. That's Friday. Otherwise, that would be a negation of the bullish inside bar, which is generally bearish. And usually you can get a pretty sharp move in the opposite direction when a bull pattern fails, and vice versa. Where would I look for this to go? Well, CCJ here, you got some support around 37.50. And that's actually... you can't really see it from there, but that was the Fukushima gap. So that was the gap fill from 2011. You can see you got this chop zone right there. And, pivot low and so on and so forth. Through that, though, your next really big level is 32 and then $30. You might not think it can get down there, but, corrections do tend to go deeper than most people think. So don't think it can't happen. But looking here at a fib, there's your 50% fib at 28. And 382 at 33. So those are some levels there. A slam dunk would be if we ever got down to 23 again. It would take a pretty big bear move for that to happen. But that's what I'm looking at on the monthly. You're working on a pretty good outside engulfing candle too. And it's, we got a week left in that month. But definitely reversal. So definitely starting to look top heavy here. So with that said, what would we look to rotate to? Let's look at NXE. So I'm going to start with that. I did have that list set up for you guys in the picture. I know some of you guys commented on that. But you can see NXE here. So a lot of these charts look the same. They're kind of similar patterns. It makes sense. They're all the same sector. But in fact, the next one I'm going to show you is almost It's almost exactly the same too. But NXE here, next gen, same thing. Green bar, if you're above that on a weekly close, it's safe. And I did work out a target little calculation of 950. So that would be the next major level on the upside if this uptrend remains intact and everything, holds up. If this breaks down, notice how this is coinciding with all these three pivots here, and even this one to a lesser extent. So 650, big line in the sand, right? So if we close below that, especially on a weekly, puts us into correction mode, and you got 550, $5, and we can go back a little bit further and take the pivot here. I believe there's some other levels down here. 440, 445, 450 is your 50% fib. If it ever got back down to 350, that would be a slam dunk. You might say, well, it's never going back down there. The fundamentals, I'm just giving you the levels, okay? So don't think it can happen. It's always good to be prepared. But those are the levels I worked on NXE. So 950 if this holds up here and we rotate. But corrective mode, those are the levels there on the downside. 650 is definitely a line in the sand on that. Next up, I have UEC, and you're going to see why it's almost the same, because here's this pivot here at 650, and we're sitting right on that right now. I almost had to do a double take on this when I was just putting up the notes earlier, but you can see right here, right above that green bar low, right on the weekly 20 MA, and that's your line in the sand. So if that pulls back and blows and closes through that, you have some support around 550. That's where we broke out last. A lot more at 450. Right, and then if we take our fib, I always like to try and line it up with a fib. You're going to see 530, 382, 435, 50%. And your 618's at 341. Again, that would be a slam dunk if we ever got down there. Again, not expecting that, but those are the levels I'm looking at if it were to come back in. So 865 would be your first target on the upside. It's not that much higher than this previous high. And then after that, about 9 to 920 is the next level. So it says a fair amount of upside if it can keep going. Just again, a lot of these we're working on kind of monthly engulfing. So they're going to need to get repaired here by the end of the week, end of the month, that type of thing. But again, it's a good time to do it as they might be topping out. You might want to look to rotate and move money around. Next one I got is good old Denison. I think Denison's interesting, by the way, because it hasn't really, it's up, but if you look at a monthly, this says, this was around back before Fukushima, back in 08, 07. And look at where it is on the chart. So again, those levels I gave you on like UEC and levels I'm going to give you on some of the other ones, some of these newer issues, those are just like kind of near-term, medium-term targets. If Denison goes back anywhere near all-time highs, right, that's like, what, 12x or something like that from where it is now. So if all those other miners follow, they could also do that. So that's why it's interesting to look at a company that's been around for a while. But Denison pulling back here, I do like this kind of monthly structure. And the weekly as well, same thing, power bar, early Jan, pull back to the 20-week moving average. It's got a good distance away between the price and 20-week moving average, so this has some wiggle room. So I think Denison is interesting and bullish here. Bullish targets 245 to 250, and then just below 3, I calculated, but we'll just say $3 to keep it even there. That's what I'd be looking at there for Denison for targets to the upside. On the downside, if we were to continue to retrace, again, there's your 2.5, right, coinciding with that red green bar, $1.40, and then $1.17. There's your weekly 200 MA right there, and then 618 just below it, just below $1. I don't know if it gets down there, but that's where I would look at Denison. So, but I do think this is interesting considering it's got so much room to make up. Again, looking at to just go back to CCJ, not that far off of all-time highs. Denison, there's a lot of room to go, especially if the rally continues to broaden out. All right, let's look at the quadruple U's or energy fuels here. So this one's a little bit different. So this one has not had nearly as good of a month or as nearly as good of a run, but we do have a nice wedge here, and it's very visible. You'd have the weekly 200 MA right here, and there's also, again, going to the 2020 lows. There's also a 618. Well, you're into the 50% right now, but technically you've already hit that, so I don't really count it. And you've already hit the 618, so I don't love it. I would prefer here in this situation to make a higher low at this trend line. I don't want to see this go down for that 5 handle again. It doesn't mean it can't hold. It would just kind of, you should have higher lows, right? If you're in a bull market, you should be able to make those higher lows. And we lost this kind of bullish structure up here, but you do have the wedge. So that's your positive there. So if you're looking for an entry, you might want to try down near 530, 540. You've got a failed, bear flag here on the weekly to work off of. So it requires institutional sponsorship to break one of those. So that is where my guess is where the institutions are sitting, just like they defended it here and here and here. So that's where I would look to accumulate this. Maybe you could even put in a higher low at the weekly 200, right? It has not tested that since the breakout. So maybe that's what it's going for right now. But those would be the levels there that I'm looking at. Again, these are not swing trading levels. These are levels all for you guys to DCA. So don't take this as a swing trading video. This is just kind of more of a longer term technical analysis. And then obviously for energy fuels, if you can break through that top side of the wedge, you'll have resistance at 10, 11, and then, of course it can go higher after that, but that is what I'm looking at there. Let's get on to EU. So Encore Energy. This one has been in a nice uptrend as well, and looks a little bit different than some of the others. You're going to see we went up into this pivot, and a lot of pivots up here around $5. We're backing off. But what I like about this is you have right here 1, 2, 3, 4, 5, now possibly 6 higher lows. Nothing wrong with higher lows, right? We did have a pretty good outside week, wiped out 2 or 3 weeks worth of action in 1 week. But if you can make a higher low, this can still firm up here. And if we're able to get through these pivots, it's pretty good. So 573, just say 575, and then $7. So this has considerable upside from here. If this backs off, and again, this is kind of a newer issue, I think. No, it's not. I take that back. It's not one of the newer issues. But either way, the COVID low is the same. You're going to see here retrace levels, we'll just say 350, 382, 275. I would really like that level, even as a swing trade, not just long-term investing. And then your 618's down here at 220. But if this maintains higher lows, we won't even need any of that. So this one is interesting here, and I like those price targets too. This one got requested a lot. So LEU, again, looks a lot more like the quadruple U, with that kind of like bull structure that kind of failed and backed off. Here's a long-term trend line going back to 2020. We did have that big peak, and you can see every time we try to get back above 55, 60, it's kind of failed. However, if you can put in another higher low down here, you got the 200-week moving average down in this area, and at some point you're, in the future, it's going to coincide with this kind of breakout area with that green bar. So that could be your area. I also like it around, which is, it's a little bit more shy of that area, but 37 to 39. There's your 618 at 39 there. So kind of anywhere in this area would be kind of the sweet spot for me to dollar cost average. Or if you're really patient and you want to wait, you can wait for the 7.5 fib at 34 and change, 200-week moving average in that trend line. It did not work on really price targets for this, just because you have so much resistance up here at 90, 85, 90. But that would obviously be a logical area in the future if it were to start taking off again. But it has lagged, so maybe that, it's on discount. Maybe that's something you want to look into. URG, a little bit weaker here over the last couple of weeks, but still above that breakout bar. So the levels for this are So if we take a fib from here to here, you're going to see the 618 right around $1.25. And it kind of coincides with that low there around $1.30. I really like that level. And you're going to see it stacks with this fib from the all-time low, the 382. I like that level. I know that would technically be below that green bar, but there's still a ton of support here. If we were ever able to get through that 1.15 would be a big level. If this firms up and breaks through and breaks through this pivot high to all-time highs, or I should say not all-time highs, but you have that another Fukushima company, but $250 and $3. So 250, I think it was 248 I calculated, and then again we'll just say 3 to call it even, and then use obviously your double top there. Well, that's what I worked out on that. UROY, Uranium Royalty. Again, a little bit on the weaker side. A nice breakout bar, and then it's kind of round tripped that. If this, I definitely don't like this one as much because you have those lower highs there, and you couldn't sustain that higher high. If we lose that green bar, this could go to $2. So this is one I'm not as much of a fan of. You got to hold this green, and then you got to firm up and firm up here, consolidate, and then force a higher high. If that happens, you can work your way back up to 4.25, 450. But this one's definitely on the weaker side, and it definitely needs to hold that green bar low on a weekly close. So that's one I would be a little bit more careful with. All right, we got a couple more. So we're going to look at Bannerman Energy. I like this. So this is a request too. That was not on the list there. Another Fukushima company looks like. I don't know much about it. Obviously, it's on the OTC. And also keep in mind, it's OTC. So it only trades like 60,000 shares a day. So one company could come in, one hedge fund could come in and whack this. Just be aware of that. It's really thin. But it does seem to follow price of uranium pretty well, and the miners. So I think it's pretty safe. But just keep that in mind. But chart wise, I like this weekly. 50 above the 20 above the 50, 50 above the 100, 100 above the 200. Good spacing. This is pretty good. And look at how far away it is from the green bar low, even versus like a URNM or a CCJ, which is below it. So this no, I'm going to lose a ticker here. LF, there we go. This chart's actually pretty good. So, even if you got back to $1.90, there's a lot of support here. You could even like look to scoop it up there. Again, it's thin, so don't trust, the volume's not that good. But just at face value, there should be support there. If it breaks that green bar, it gets a little interesting, and it might want to come down and fill that gap. But at face value, it looks fine. I don't really see any problems with it. I should not come up with a calculation for it because it's so thin, and prior to 2020, it was extra thin. But I'll just say, $3, $3.50, we'll call it for your upside targets if it stays firm. All right, one last one, and then we'll just do the URNM and URNNJ, but I'm going to look at Kazatomprom. I believe this is the correct one. I think so, yeah. So I like this a lot on the monthly. I really like this monthly structure. Nice run up, pullback, big power bar. This is a chart I really like on the monthly, so keep in mind it could take a while. Weekly is fine. This looks honestly better than even some of the other ones I just mentioned, just because they're not so dependent on that power bar from January. It looks like this whole structure here is sideways bullish consolidation versus, again, just to use URNM as an example. It's like a power move. We had a consolidation here, then we had a power move, and we kind of curled back down. Whereas CAS, is just been sideways the whole time. So it's just coiling energy below this pivot. I would say another month, if it's still in this range, it's ready to go. Another maybe 1 to 2 months. That's all I think it really needs. But I like this a lot on the monthly. I did not get levels on this, but I'm assuming it can go a lot higher though. If it fails and breaks down, then yeah, you could go all the way down to like 32. But I like that pattern a lot, so that's a good one. All right, lastly, we'll just quick we'll talk about URNM, but if this holds up and that green bar gets saved on the weekly, targets are 70. Okay, so that's going to be the next big target. That's quite a ways away, but that's the next mathematical target I have. And then if it starts to fade and this breaks down, 40, and then believe it or not, 35. This would be an absolute slam dunk if it got here. There's also a big trend line here. Might still be in play on the way down if it got down there. So there's a white trend line there. URNJ, again, it's a new issue. Only goes back like a year. Yeah, it's just a year now. Same setup, right? Green bar. You don't want to break that. If you do, you know, it's tough. You'll have some support around 20, but then really it's down to 18. I can't do a price target on this because there's not enough price history for me to like give you an accurate. But what I can say is, you had a $6 move from here to here. That's an inside bar pattern. You could even go from 30 to 23. That's $7. And say if it takes off, you just add that, and there's your measured move. That would be kind of like your next stop. But yeah, again, like with all these, almost every one of these charts, it's all dependent on, does this green bar hold here on a weekly close? And again, looking at even a URNM on the monthly, I would not want to see an engulfing candle. Same thing with spot uranium, which we're close to, and CCJ, which is basically in that territory right now. We definitely don't want to see it close below last month's low. It would be a bad look. Again, not the end of the world. We could still, you know, this could still just be a buying opportunity to rotate, which is what the video I'm doing here is all about. So anyways, guys, let me know if you like the content. Thanks for giving me the idea. You guys take care. Subscribe to the channel. Let me know what you think in the comments. And I will see you guys all in the next video. You guys take care.